Value has to be created for everybody in the equation, everybody in the ecosystem. It obviously has to be created for your customers, or they're not going to pay you and you're not going to have a business. It has to be created for your investors, because otherwise they're not going to fund you. It also has to be created for your employees and your team, all of your stakeholders. I think it's very tempting to think about the exchange of money as value. I pay you a salary. That is our value exchange. That is not what motivates people to do their best work. It is not what makes people deeply devoted to an organization.
Hello, and welcome to the Show Your Value podcast, where we explore the art of value creation in three macro buckets: material value creation, emotional energy value creation, and spiritual value creation. I'm your host, Lee Benson, and today my very special guest is Gary Arnold. Gary holds more than 2 decades of experience as both a veteran of several startups, as well as being sort of leading functions at Fortune 500 companies. At heart, Gary is a builder and led the formative stages of Amazon Pay, created and scaled Haibu's digital division from zero to $100 million a year in annual recurring revenue, huge success there, and built the merchant product marketing organization at PayPal. In addition, Gary has held roles of ski instructor, boat captain, whitewater rafting guide, scuba instructor, bartender, and I can say Grand Canyon excursion organizer. I've experienced that too. Gary, thanks for being here, man.
Thank you for having me.
Yeah, really kind of curious before we dig into this on the value creation side. What was your favorite non-corporate role? Was it the bartender, the scuba diver, the ski instructor? Which one was the favorite, if you could even pick one?
Yeah, I've had a lot of fun in my career and a lot of very nonlinear experiences, all of which I've learned amazing things from. But if I had to put a pin in it, for many years in the Hawaiian Islands, I worked as a charter boat captain, and the ocean is a passion of mine. Being out on the water every day, that's hard to beat.
Yeah, were you a scuba instructor at the same time as you were doing that?
I was, yeah. Once I got my license, I didn't dive and teach as much, and I was more focused on driving the boat. But yeah, I spent as much time in the water as I possibly could, irrespective of my role.
Well, I bet you met a lot of pretty interesting people being a boat captain and taking folks out and doing that.
Absolutely. You see every slice of humanity. You see people really enjoying themselves and on their vacations, and you see people who can't enjoy themselves on their vacations. And those ones always, I tried a little extra hard, trying to get them to relax and enjoy it and see what was around them, because, being on the water, being in the water in the Hawaiian Islands, it's, again, tough to beat. If you can't enjoy that, you can't enjoy much.
Yeah, the Big Island is probably one of my favorite places to be, camping on Mauna Loa and just all the different, beaches that are away from everything. I just love it there. Yeah. Why do you think that is? If you were going to pick those that can't enjoy it, are there one or two things going on that you've noticed that prevent them from actually enjoying the vacation?
Yeah, I think the majority of it comes down to unrealized expectations. People have this expectation they're going to go on vacation and the family's all going to get along and everything's going to go smoothly and it's going to be this perfect trip. And the reality is that's never going to happen. I mean, you go with your family, there's going to be, some drama. You're going to miss a flight. You're going to have something canceled or delayed. The hotel room's not going to be exactly what you thought it was. And the people who could really relax into and enjoy their vacations, I just watch them, that kind of stuff just wash off their back. The people who couldn't would fixate on it, and they'd miss all of the great stuff that they could have seen, all of the great stuff they could have experienced.
Well, what a big opportunity missed. I wonder if they're over planners, sort of micromanaging every hour of the vacation. Like, for example, my first longer vacation was in 1986. I'm totally dating myself. Went to Australia, New Zealand, and Fiji for 6 weeks. in total, only booked the first night, and the rest of it we'll figure out what we want to do when we get there. And I just love that. And I've been on vacation with others that plan every minute. It's like, this is too stressful. I don't want to travel with them anymore. But is there something there too where that gets blown up because of that?
I think so. There are definitely people who can plan a vacation and pull it off well and enjoy it. But when you're planning everything down to the moment, there's more and more opportunity for missed expectation, I think, there. And for me, I'm like you. I traveled for actually 6 months in 1994, dating myself a bit as well. I bought a round the world ticket flying west and left Hawaii, was gone 6 months, got back to Hawaii. And the only thing I honestly planned at the beginning was my first plane trip, which was Honolulu to Auckland, New Zealand. After that, it was where the wind took me.
Well, that's incredible. That's my dream vacation. So maybe next year or the year after, I'll do something like that.
Always happy to chat about it.
Yeah, I've had the pleasure of working with you in one startup, and I'm kind of curious from your view, what are the cultural differences in what happens in a startup environment versus working in a large company like GoDaddy or Amazon and all these others where you've had experience?
Sure. I think it's dangerous to generalize because not every large company operates in the same way and not every startup operates in the same way. But I do think that there are commonalities that you can call out. In startups, there is a very natural constriction of resources. And therefore, when you're trying to accomplish something, it's almost always with a resource constraint around it. And people get creative in how they solve those problems. And they test and learn quickly because they don't have the time or the money to test deeply and broadly. And that mindset, I think, is A, really critical to startup success, but B, I think it actually can be emulated. I was at Amazon in 2011, which it was a big company already. It was 50,000 people, but that's very different from the big company that it is now. And back then, that is how that company operated. You had an idea, you had a business proposal, you wrote up a 6-pager. That's how Amazon Pay came to be. There was onus to prove the business case and prove it very, very quickly. There was not a ton of resources thrown at it until you had proof of concept. In fact, there was oftentimes no resources thrown at something until you had proof of concept. And that, I think, it's fundamental to how Amazon has always moved quicker than other big companies. They don't get mired down in the bureaucracy. And I think that's a key part of it. Another key part of it, I think, for Amazon personally, is they delegate responsibility and ownership for things. If you own a business, you own the business. And the type of overarching, kind of management, I'll say interference, maybe that's a little harsh, but that is not, in my experience, there nearly as present. If you had a business case and if it was provable and you could get resources for it, you had both the autonomy and latitude as well as the ownership and responsibility to make it work. My former boss there used to call it the single throat to choke. And that was real, but it helped us move really, really fast.
Well, that's not exactly what I expected when I asked the question or what I was thinking. It's almost like it's the same environment in a true startup, completely away from the resources of a large company like Amazon. We do have much fewer resources. Time is not our friend, and we have to make smarter and smarter decisions to go. And a lot of times they just go away, like it didn't work out, and investors lose their money. But it sounds like the exact same thing. If you just take the Amazon culture and look at that, sounds like they're not giving it a ton of time. You have to prove it quickly. You'll get resources as you earn it, and that could go away just as fast, maybe faster.
Absolutely. I mean, that is a decision that can be made in a weekly meeting to kill a project if it's not tracking fast enough. And one of the precepts around how to move forward in business at Amazon is to make the decision when you have 70% of the information that you want. I've lived by that. I love that precept. If you wait until you have 90% of the information, the market's past you. If you make a decision with 60% of the information, it's really no better than a coin flip. So there is kind of a sweet spot there, but that's very real inside Amazon's culture. It's how business works. It's how that company functioned. Certainly at least when I was there, when it was a bit smaller, but still a large company.
Yeah, 50,000 employees is still quite large.
Yeah.
I think they're on track someday to be millions for sure. So
yeah, I believe they're well over 1 million now.
Yeah, pretty incredible.
Yep.
So, here's something interesting to look at. In the one startup I was involved with you on, and I'm involved with a lot of other startups, and this is just part of the work that I do. It feels like to me that when larger companies do this, their success rate is higher than when true startups outside of that ecosystem start up, because it's not just the resources; it's more the like get it right quickly or we're not going to do this. It's like a pressure to perform that isn't there at the same level intellectually on the true startup outside of that ecosystem. Talk about that a little bit. I think you see where I'm going. Yeah.
And I think that's a fair observation. Although this is a yes, and I think in cases like Amazon, that pressure, that discipline is deeply entrenched in the culture, and there is no avoiding it. There's no talking your way through a next board meeting or a next small raise. You're either proving yourself on a timeline or you're not. In other companies, other large companies that I've been around, I think sometimes internal startups perhaps succeed for some different reasons. One can be more resources, because some large companies will just throw lots of resources at a project because they like it, they believe in it, or oftentimes because one executive likes it or believes in it. Also, oftentimes the formation stages that I've seen of startups or net new projects inside large companies is somewhat different. At GoDaddy, as an example, I was brought in to lead a kind of nascent division that had sprung up organically. GoDaddy is a very DIY-centric company, and yet there were lots of customers asking, please, can't you just build this website for me? I will pay you. And that organic need drove the creation of the business unit that I ran, which was called Professional Web Services. And as opposed to having to go out and really understand the very genesis of customer need and product market fit, we already had a lot of that information coming to us. So when I started that role, it was appropriately sitting in the product marketing organization. And yet my role and my job there was somewhat further downstream than it would normally be at that stage in a true startup, because we had this customer demand coming in. And that's a really powerful signal around product market fit, around customer needs. You can mine that and iterate really super quickly on what the product portfolio should look like, what the price point can be, what the selling motion and the demand gen motion needs to look like, which again in that instance was different. Most of GoDaddy's products are sold DIY. You go onto the website, you click on it, and put your credit card in. But a small business isn't going to do that for a $3,000 or $4,000 website. They need to talk to somebody, and so we had to create a sales motion around that, and it was very successful. But again, I felt like I kind of had almost a head start, if you will. There was so much information coming in and a bit of demand already that we were able to just harness and multiply and scale.
Yeah. And larger companies typically have a lot more to leverage with existing customers, right? So there's a reason there.
And brand, never underestimate the power of brand in that context.
Yeah.
Because, selling a even keep with the theme, a semi-custom built website for $3,000 or $4,000 to a small business.
Mm-hmm.
Do they trust the company that they've never heard of to build them this website, or do they trust the company that they already buy their domain from and they see the commercials on TV and they have an impression of what that company might be? It's a different starting point.
Yeah. So for you, what feels different? I'm not sure this is the right way to frame the question, between being in a large, established brand company startup role versus a true startup outside of that. How does it feel different for you, and how would you describe that?
Sure. In most cases, at least in my experience, the difference has come down to the impediments that are in front of you. In a true startup, the impediments are generally relatively clear, right? You have a competitor in market, or you don't have a competitor. You're trying to build a market, and therefore you have the impediment of creating a market, creating a need in the customer's eyes, educating them, etc. Which you can have in a startup in a large company as well. Not always, but sometimes. The illustration here I'm trying to make is that within the larger companies where I started a project or started a business unit, oftentimes the impediments were internal. It perhaps competed with another product internally. In fact, that happened to me multiple times in different large company startups. And having to navigate that internal competition, if you will, that internal politics to a degree, in addition to having to prove your market, having to prove your product, having to identify your TAM and your IC, your ideal customer profile, all of these things. It was sometimes a bit of an extra layer on top to also have to manage expectations and politics across a broad organization. And it's something I don't personally love. I'd rather focus on the customer, focus on actually building something that delivers value to them, and not have to worry about the peripheral if I don't have to.
Yeah, I've experienced in larger companies, there's a competition. Hey, my project will accrete more value than yours, and got to think long term, go after it. Whether it will or won't, it's true or not, it's an interesting game to watch. Do you have a preference, whether it's startup within a large business, or completely separate from it, or do you just thrive in like both?
I really have enjoyed both, honestly. I would say the determining factor of whether I've really enjoyed a particular role, whether it was in a true startup or inside a large company, has typically come down to leadership and leadership support. So, if I'm working with a CEO, and in a startup, I typically have the role of CMO or Chief Revenue Officer. I'm typically a go-to-market leader. But if I have a CEO who is very much aligned, very much willing to partner and work together to take a product out, that's where I can thrive. Similarly, inside large companies, if I have a senior leader, in the case of a couple of my previous ones, the CEO himself was actually quite interested in the little startup that I was running, and commensurately, I got a bit of air cover from what could have been even worse political, maneuvering needed internally. And that just fundamentally allowed me to run faster and to focus more on how do we deliver a product that creates value for our customers, rather than whose toes might I step on if if we branch the product this way or this way, or if we position it this way or that way. So a lot of it for me has to do with the people I work with.
Yeah. Well, that's a pretty big lesson in the right relationships really matter in larger organizations. You can call it, political capital. You can call it whatever you want. But if we're really trying to create value, it can be stamped out pretty quickly for something that won't bring nearly as much value. So Gary, I actually just started my 8th company from scratch. They've all worked. I expect this one to work really well. I love being in the game. But I've always thought about, like, when we're creating value, yes, for the business, like how consistently we're growing cash flow and profitability, and that kind of, sets the value on people would pay for it. But the reason they've done well, and all of them have worked so far, is that I really focus on how it feels to be there. So the emotional energy piece, as well as the spiritual piece, which is connectedness. How connected are the team members, our customers, suppliers, all of that. And I would do intentional things in all three. And it created a lot more material value, where it seems like 95% of the world is almost solely focused. But the whole thing, it created more of that, and it just felt better going through. So this kind of speaks to culture. How have you thought about those things? Because I bet in the larger companies and even the startups, it's the pressure to not die because we run out of money, or we're not proving the project or product fast enough. How do you think about those things?
So again, I would characterize in my experiences in large companies as being somewhat different in that context, and in having everything to do, to your point, with the culture of the company and how it operates. At Amazon, one of the leadership tenets is customer obsession. Focus on the customer, focus on delivering value to them, work backwards from there. And that, unlike some companies out there, that's not a platitude written on a wall. That is actually the way that the business operates. That's how you are judged as an employee, as a leader. That's how the business makes decisions fundamentally. And I have always loved that point of view and that approach, because at its heart, or at its core, I fundamentally believe that revenue is a byproduct of value delivered to your customer. Now, that gets gray around the edges, and even black around the edges in a lot of cases, when people are overpromising and under-delivering on value, through the product or service that they're selling. But the bottom line is, if you can stay kind of pure and look at it through that lens of, how do we fundamentally deliver more value to the customer? How do we solve problems that are commensurately large and impactful in their lives, whatever that is? That's fundamentally delivering value to them. And the precept I've never seen break in that context is, when you deliver value to people, they will pay you for it. And they'll pay you handsomely in many cases. But I find a lot of companies invert that focus. They focus on the revenue first, and the value is a secondary. And that's, in my opinion, the completely wrong way to think about it. You focus on delivering the value first. And when you do that, the revenue comes, and it comes easier in many cases.
Yeah, I 100% agree. I see a lot of startup entrepreneurs in my experience, and I see a lot of them. Unfortunately, more than half of them seem more interested in raising capital and exiting and making a bunch of money, not solving the problem by creating the value that you're talking about. But another thing I'm noticing just about everywhere, and there's, most companies have people that want to do really well, and it's a very, very small percentage, that less than 1% probably, that don't want to do well. But I'm finding that leaders don't understand the business model. How does the math work? How do we price it? What are the expenses? What's the profit? What's the potential for future profits? And what can they do to help with that in their area of the business, relatively speaking? And then the second of the three areas, the culture piece of it, they're really not connected to it. It's just wallpaper around the facility. And then the third, the value of the product or service. Do they really understand how the market feels about it? Can they stump speech around it? And do they understand how in their role they can improve it? So I look at those three things and I say, wow, there's so much work that could be done there, because I'm seeing this a problem like literally everywhere when you ask those questions. How does that land on you in those three things?
Sadly, I completely agree. And what was going through my head as you were talking about that, if I had to sum it up, it comes back to, when was the last time you actually spoke to one of your customers? Right? I ask that question every time I join a new organization. And frequently I either lead product marketing directly or I lead it as one of the functions. And product marketing, particularly, product also, all parts of the organization really need to be connected to the customer and to their problem. I think that the ability to lead any business function from behind a closed office door, it does not work. I don't believe it ever really worked. Perhaps 50 years ago, it was different. The market was not evolving as quickly. If you came up and you were in the trenches and you were talking to customers and you were implementing things, those problems persisted and they were similar over a 20 or 30 year period. And so when you were in senior leadership, you absolutely did have firsthand experience with that customer problem. Today, the market moves so quickly. If you are not hands-on with your customers, with the product itself, in my case, the marketing itself, writing the value props, messaging, positioning, writing the content, doing the A/B testing on the next new platform that is coming out and understanding what their targeting abilities are, you miss the market so quickly because it moves past you. And so, regardless of the position I've held, regardless of the position that people I'm speaking to hold, it's a question that I hit every time. When was the last time you spoke to your customer? When was the last time you used your own product? When was the last time you watched one of your customers use your product? Because if you're not doing that and you're not doing it frequently, that customer's needs, your market, your utility and value that you're delivering are rapidly changing and will go away.
Yeah. And how many CEOs do you meet that don't get out there and meet with the customers? That's the one that blows me completely away.
Too many. There are those who do it. And in my experience, I found that very highly correlated with success. When you've got a Series B founder who has raised $20 million and is now managing a board and a group of investors and a group of first-line leaders and a more complex organization, I think it's very easy to get sucked into that because it is real and immediate pressure, right? You're getting calls from your board all the time. You're getting investor questions constantly. It's very real. But if you don't carve off and make time for that, just like if you don't carve off and make time for intentional leadership in your organization, you're going to miss it because there are way too many demands on a CEO's time. And you as the CEO, I believe, have to be the one who defines and prioritizes and decides, okay, how much time am I giving to my board? How much time am I giving to my investors? How much time am I going to give to my customers and my team? And CEOs that balance that well, I think across the board, my experience is they've done better.
Yeah. And for me, it's super challenging. I feel like a rope in a game of tug of war sometimes when I'm turning client companies around and I really lean in. I call it full contact value creation. Like, okay, let's get this thing cleaned up and let's go for it. But what I find is you've got this team on one side and they're all about creating the value and doing great stuff. And then on the other side, I've got equal, if not more, strange noise about adults fighting over money that we haven't made yet. And board members just creating all kinds of activity that are not helping get them a return on the other side. And so I think for a lot of these startup CEOs, they can be sucked into that world of adults fighting over money we haven't made yet and not be on the front lines with their team and on the front lines with the client. So I've always made a practice of doing what you're talking about. I need every day in some way to be on the front lines with my customers. And my team creating value. And luckily, I'm way past the point of needing money for my startups. So I don't have to worry about a bunch of adults fighting over money we haven't made yet that are bringing no value. That's the way I talk about it. How do you describe that craziness?
Well, I think first off, I love the term full contact value creation because done right, it's what it is. It can be messy, it can be bloody, it can be, painful, but it's what is needed to get it done. It's, to me, full contact value creation is getting in there and listening in on sales calls or going on sales calls with your team. It's dealing, helping your head of HR deal with issues, because it may be indicative of a broader challenge within the organization. It's, it's getting in there and, troubleshooting bugs with your product and development team to try to understand, what is the root cause of this, and is it broader than just, one little customer complaint, one problem. So, that model of full contact value creation, I think, is exactly the right, kind of framing and moniker for it. In terms of how I believe and how I coach and advise CEOs on how to balance those things. First off, there's no perfect balance. This concept of getting everything 100% right down to the percentage point probably is counterproductive if that's what you're looking for. But over a time period, it has to balance out if you're doing it correctly, right? You may not be able to go on 3 sales calls one particular week because you've got a board meeting and you've got travel and you've got something else. You better go on 6 next week. You may not have spent, any appreciable amount of time with your head of sales or your head of marketing in the past couple of weeks because, you've been busy with X, Y, or Z. You better make it a priority because in those 2 or 3 weeks, that part of your business has evolved rapidly. And there's been 150 little decisions made and 150 little learnings taken in, and you're not going to get them if you don't engage. And it just simply has to be a priority. In my own experiences, particularly when I've had large teams, I have carved off intentional time on my calendar, blocked, not to be disrupted, where I'm specifically looking at my team, meeting with one-on-ones, talking strategy about a broader topic that's in my head that's affecting our business right now. But again, if you don't make that time, then you will never get that time because there will be 100 other pressing little issues that sound super important, and some of them are, and you can't ignore everything. But, again, in my experience, the most critical things will come to you and you can deal with them. But you have to carve off that intentional time to be in the trenches, understanding your customer, understanding your market, understanding your team and your organization. And if you're not doing that, it's going to move past you really, really quickly and you're going to miss things.
Yeah. Big missed opportunity for sure. Developing leaders to create more value over time and being objective about what that is. That's where I've spent the vast majority of my time over the last few decades with my different businesses. And wow, has it made a difference. When I describe the primary job of a CEO, I say it's to continually and responsibly increase the value of their organization. Does that align with how you think about the primary job of a CEO?
I think it does. I would perhaps expand it a bit, and I don't think you intend it in a limited view, but in my own view, value has to be created for everybody in the equation, everybody in the ecosystem. It obviously has to be created for your customers, or they're not going to pay you, and you're not going to have a business. It has to be created, perhaps in the future, but it has to be created for your investors because otherwise they're not going to fund you. It also has to be created for your employees and your team, all of your stakeholders. And I think it's very tempting to think about the exchange of money as value. Well, I pay you a salary. That is our value exchange. That is not what motivates people to do their best work. It is not what makes people deeply devoted to an organization. People want connection. Business is done between people. And that is a very easy thing to miss sometimes. But, the human contact and the human connection and the growth opportunities that your team gets through your organization and through interactions with you as a leader, that is absolutely critical to their perception of value within the organization. If you're not doing that and you're just simply, relying on the money that you pay them and the potential equity downstream, you'll get people who work hard, but you will not get people who are devoted and waking up thinking about it at 3 a.m. and how could we make this better, and coming in at 7 o'clock at night because your website's down and getting it done. That's not how you deliver value to your employees.
It is a fact. When I look at the 3 buckets and how I think about holistic value creation, the material or money piece of it, there's so much benefit to all team members in an organization when the company's worth more, has more cash reserves, can survive downturns, job security, all that stuff. And to your point, if we don't get the emotional energy piece right, what it feels like to be there, which I think emotional energy is the scarcest commodity on the planet. Most people say time. Nope, it's not. It's how you feel going through time, I think, that really matters. So if you don't get that right and you don't get the connectedness piece that I put in the spiritual bucket with all the team members correct, you really limit the potential to responsibly grow the value of your business. There's a huge limiter there. And when I think about CEOs, like what's the best way to develop them? I think you get one coach. And that can be really good. Like anybody that works with you one-on-one, I think is super lucky. You're really thoughtful, amazing experience about what works and doesn't in the real world. But I love the concept of getting a mastermind right to be part of it, where there's true evergreen value going on. And what I mean by that is, how do you get a group that's not too large and it's limited in size to where you know so much about each other's business that you're getting 80% plus of all the brain power in the room. And this is where you go for practical CEO wisdom, what works and doesn't work in the real world. And then they're together long enough and it just keeps stacking on itself as we do stuff. And we know we're doing the right work when all the businesses are growing. We think of the conglomerate like we all own it. And most masterminds, they end up being kind of like networking groups or just sort of checking in, sometimes support groups. But they lose the bigger ones, and I've been part of a lot of them for a long time. The bigger ones lose their evergreen value pretty quickly. So I know you're kind of moving into this. What's the value of getting this right? And let's spend a little bit of time talking here, because I see a lot of money being wasted and memberships and the friendships, all those connections, I think on the spiritual side can be amazing in any group. But if you're going there to intentionally and responsibly grow the value of your business, they're missing huge amounts. So let's dig in there. Where would you like to start?
Absolutely. There's a ton to unpack there. One of the primary things that I believe has a huge amount of value in belonging to an Execute Mastermind is sharing the wisdom and experience that you have. I always get more out of giving something to someone, my experience, a helping hand, whatever that is, than I would from receiving it. And when I've watched groups interact and I've watched, a particular member help another one, the recipient is grateful and happy and they've received value and they are stoked. And that, that is a huge benefit. But the person who helped them solve it gets equally or more, certainly emotional and personal satisfaction and growth out of it. And I think that is so critical. I mean, if we're not on some level helping other people in the world, we're not growing. We're not getting better. And even functionally, when you teach something, when you share knowledge that you've acquired, you understand it at a better level than you did previously because you never had to articulate it perhaps before. When you share that, it's yet another way that you get value from sharing it, because every time you share it, every time you teach it, every time you say it, you get a deeper understanding of that, piece of knowledge and value that you hold. And I've watched that interaction in really good groups. When they share, both parties benefit. And it's frequently not a simple one-on-one. There's 8 people sitting around the group, or 6 people, or however many there is. When there's too many, that gets lost. But when it's intimate and the individuals in the group actually care about the success of others, it benefits the entire group. There's no one who's just coming and getting all the good stuff and going back and running their business. That is not someone who is contributing to the group. That's not somebody who's going to be the right fit in a group. And putting that together is a really interesting little microcosm of leadership and just facilitation. I've watched you lead groups, and you've got lots of wisdom and lots of background, and you've had so many, interesting business challenges in front of you. But what I've watched you do is tease that out of everybody in the group, because, 8 smart people in a room are always going to outthink 1 smart person in a room.
Yeah, that collective wisdom is incredible. And in the groups that I run, I can have one where there's a $1.5 to $2 million a year revenue business that's wants to grow to 25 or 50, with a $300 million a year very profitable business. And the value both ways, it doesn't matter if from there and everything in between, it's huge, because they realize they can create more value in their own businesses when they're leaning and helping each other's CEO develop to create more in theirs. And kind of going back, I sold my larger aerospace company in 2016. And at the time I was running it before the sale, I had 3 different businesses. I'm running the biggest one. I've got presidents over 2 others. And they wanted to be part of and I was part of Vistage. I guess I'd probably gotten out of it a few years before I sold the company, but I was in there almost 17 years, and they said they wanted to play in an environment like this. I said, great, we'll sign you up for a year. Let's see how it goes. So I'm checking in at the end of the year. I said, please give me a list where you've objectively gotten enough value out of there to improve the numbers for your business. And one of them immediately said, nothing. There's really nothing there. I just like the people. So like, okay, great. We're not going to renew, because we did it with the intent of helping you grow your business responsibly and faster. And the other one said, well, let me get back to you. And it took him a week, and he came back and said, man, I just thought about it and I couldn't get anything out of it. So I wonder how many CEOs are just going through the motions because they were there and they've got friends, but they really want to increase the value of their business, but they stay. And I think if everything we do should be done with the intent of making things better, again, holistically, value-wise, and we should be evaluating that. But I think a lot just stay because. What are your thoughts around that?
Self-discipline is difficult for everybody. It's the human condition, and there's always that desire to simply do things that feel good. And going to a group of friendly faces and having interesting conversations feels good. I think a really core and fundamental difference in the way that Execute Mastermind is structured is the fact that there is built-in accountability on an ongoing basis, and that forces an objective and cold and sometimes difficult to look at view of progress. But that's necessary to improve on something. It's no different than going to the gym or training, for an endurance event, as you and I have both done. It is fundamental that you have to put in the work, which is not always pleasant. I'm training for something right now, and there are some mornings that I don't want to go outside and go for a run. Or when I was down visiting Arizona last week, and it was 96 degrees outside, and it was 1 p.m, I had to go out and run. It didn't sound fun, and it wasn't. But if you don't do it, there's what expectation could you possibly have of progress? And so, I think the structure within the group is really critical to empowering that. Because if it was just accountability and brutality without support, no one would be able to stand it for a long period of time. But that balance of a tremendous amount of both personal, human, spiritual support, as well as intellectual and great business ideas. And yeah, I've been through the same thing before, and it's challenging. Here's how we addressed it. Here's what worked and didn't. That gives you a path to get through this difficult problem. Having a workout partner. I talk to a guy frequently who is doing the same Ironman I am in October, and we talk about, yeah, man, my left calf hurts, and I didn't want to run yesterday, but I dragged my butt out there and did it, and that helps, that human connection, that spiritual value creation. It is fundamental to the discipline that it takes and the structure that exists within Execute Mastermind, I think, to drive that kind of improvement long term. And that has its own rewards. When you look back at your business and you've seen your most important number trending over time, and it's positive, and there's been hiccups, and you can think of every problem that you've overcome during that period, but you've been able to make it go up into the right, that feels fantastic. And when you look back at your training logs and, wow, I just set PR yesterday on my normal 7-mile run, man, that's a great thing. That in and of itself has a huge amount of personal satisfaction associated with it. But I wanted to add one more comment around the kind of group dynamic and how it is sometimes unexpected in the way that different members can add value to one another. A $2 million a year startup and a $100 million, $150 million a year going business. Well, that $150 million a year going concern business was a little startup at one point in time. And there are lessons that come from that can be invaluable to the true startup founder. But conversely, that startup founder who has raised a seed round and or friends and family, and they're scrappy and they're getting everything done themselves and with their core tiny group, and they're so close to the market because they have to be to survive, there's a tremendous amount of value that they can deliver to that larger, more complex organization around focusing on their customer, focusing on value creation. Because again, it is very easy to get sucked into the day-to-day of, hey, now I've got a bigger board and, a bigger raise, and I've got more people to deal with, and that can grab your time. I think those things help. I think those things balance each other frequently. And I love seeing that kind of interaction between different levels of founders, or founders at different stages, I guess.
Yeah, 100%. And the smaller startup CEOs, they've got experience prior to that, so they bring a lot to the table. And I've noticed that the larger company CEOs have kind of lost their chops on starting a new product or service. So there's so much to learn there to watch it going on. So it helps them launch, even better internally. Some of the things that are important to me, so the trust, the vulnerability, all that. So it's easy to say that stuff. Well, what really causes it to happen? And I've been in groups for a lot of years, and they could be in, from 10 to 18 members in a group, where I've never seen the trust that gets developed within 3 months in the groups that you and I were talking about, because we know the metric that would calculate the value of their business monetarily, where they started, where they're going, are they on track, at risk, or at any point in time. We know where each CEO needs to develop next to be able to increase responsibly the value of their business. We know what winning looks like after the current year, at the end of that, at the end of the following year. We're grabbing sort of accountability milestone action items, if you will. So we're tracking each other. Are you doing the things you said you would do to increase the value of the business, which includes culture and people and all the stuff that you and I have been talking about here? With that level of understanding, as deep in the financials as anybody wants to go, wow, does it get close fast. And when people in a typical CEO mastermind group bring up an issue, people will address the issue, where in these groups, with this environment that we're talking about, they never get away with addressing a symptom. Everybody jumps right into the root cause. Talk about that, because I think there's a real challenge. I just want to address this one thing, and they're not even seeing the forest of the trees. What's going on there?
And I think sometimes that's intentional deflection, and I think sometimes it's it's self-delusion, only wanting to focus on a symptom. But the bottom line, transparency builds trust, and if you understand at a very core level how someone is approaching things, the challenges that they're facing personally and professionally, it is magnitudes easier to connect with them as a human being, to empathize with them. And, I have traveled a lot in my life, and I am a huge believer that travel builds that kind of transparency and openness in people, because you see different cultures, you see different, different human experiences. But in that kind of compressed microcosm of a CEO peer group, understanding, at a deep level, everyone else in the group's core metrics, what their business is facing, those people are all well equipped to understand what really needs to happen. You can't bull your way through that. And I think, again, that kind of transparency is going to build trust. For some people, it may be uncomfortable at first, but as soon as they see the value that gets created, because it's not adversarial, it's candid sometimes, and it's again, very transparent and direct at times. But then you know exactly where you stand, and you know that these people are here to offer your support and help you. A lot has been made of Amazon's culture. I was there when the New York Times article was written that kind of blew up and talked about how bruising the culture was. I think that was the title of the article.
But wasn't it that's where high performers go to feel bad about themselves?
Yeah, that's a quote from that article. And I saw that. All of the things that are written in that article, people crying at their desks, people being fired in meetings. That stuff happened. It definitely didn't happen every day, and it was cherry picked for impact, as you can imagine. But my own experience there, it was a lot of very high performing people, a lot of very, very bright and driven people. And across the board, I found them always willing to give me insights and lend a hand and help where they could. Now, in that instance, it was this much of their time because they were so overloaded running their own businesses. But it was never that they were withholding knowledge or, not willing to help. They would give you the bandwidth they had. But when you're in that kind of an environment, you're not going to dance around the issue when you see something, that a fellow leader might need to address. You're going to be direct, and that can be a little harsh feeling if you're not used to that kind of thing. I think again, another benefit of the dynamic of a tight and trusting, leadership peer group is that you get to know people deeply and well enough that you trust that when they're pushing you a little bit, you need to be pushed maybe. And people know each other well enough when to push a little harder and maybe when not to, based on how how that other person is feeling and reacting. But when it's always coming from a positive place, when everyone is really genuinely trying to help one another, that comes through, and it comes through quickly, and that builds trust at a level that I haven't really seen in any other specific dynamic environment I've been in.
Yeah, 100%. And one of the interesting transitions that I notice is at least half of the folks, when they start, they pretty quickly get to, here's where I need help. What can I do? But there's a few that almost want to be seen as, I've got this, I'm good, I don't need help, because that's been their persona all the way along. And watching them shift, and sometimes it can take up to a year, but it's usually way less than that shift from, I'm good, I'm invincible, and that's the front I'm supposed to show too. This is really what's going on, and I want real help, and let's dig in here and let's go for it. That's a pretty cool shift, because in most of the groups I've been part of, almost all of them stay in the, I got this. I just want to talk about how good I'm doing instead of how we can really, create more value going forward.
Yeah, absolutely. And that's one more piece to interject there. That is an interesting dichotomy of leadership, right? As a CEO, you need to be able to project confidence and authority. Your people need to believe in you because they don't have all of the information that you have. They don't understand at a deep level perhaps everything that's happening in the business, and they can't, right? When they have specialized functions and they're so deep in their particular thing, in order to know it that well, they can't have your level of understanding of everything that's happening across the org. And so they do look to you to confidently display, this is where we're going. This is how we're going to get there. This is what success looks like when we reach it. At the same time, as a leader, you can't completely buy into that yourself, and you need an outlet, you need a place, you need a group of people that you can be vulnerable with, that you can show your concerns and your challenges and be open and vulnerable about, without undoing the hard work that you've done to help your team be confident and excited about the future of the business. I think it's an outlet that's needed for a CEO or president, and I think it has a huge amount to do with the old adage that leadership is a very lonely business. You need structurally a place that you can do that, and most people don't have that outside of their business.
Yeah, most of them don't. You're right. And metaphorically, the way I think about it is, it's a place to go where you can say, here's where I'm at, pushing the leading edge of the value creation bar. And here's how I'm thinking about it. I know there's a better way. We could be doing wildly well, but we know there's a better way. And then that experiential wisdom internally can help them do that, as you're getting it from everyone. My biggest takeaway from our conversation as we sort of wrap up here is just the reinforcement of stacking on CEO practical real world wisdom. Like everything you have, and I've learned a lot here today, we just keep stacking on it so I can go forth and create more value on my end. Hopefully you've gotten something out of this where you can do the same.
Absolutely.
And I'm curious, what was your biggest takeaway from this discussion?
It's hard to say just from this specific discussion, because you and I have known each other a while, and I have gotten a tremendous amount of value in my interactions with you, Lee. But one of the things that always comes back to me, and it came out a dozen times in this, is that creation of emotional energy and connectedness. And there's many ways that you talk about that, but that goes beyond simple motivation. It's much more powerful than that. That is a It's a very finite resource, perhaps the least abundant in the galaxy. But when you can create it, and people can create that when they focus on it, the returns that has for others and for themselves is absolutely huge.
Yeah, thank you. If a CEO wants to work with you in one of your groups, what's the best way to reach out?
Through the ETW Execute Mastermind website, also through my LinkedIn profile. Always happy to have conversations and see if there's a fit. But across the board, people who actually want to and are committed to creating value in their business, in their life, in the lives of their employees and their people, it is a hugely good investment of time, and I have seen people grow and benefit from it just hugely.
Well, I believe that any CEO that would be part of one of your groups, experiencing your wisdom and your ability to facilitate that out of the group, would be really lucky to do that. So I hope a number of our listeners actually reach out. The groups that I lead, they're in-person and virtual, hybrids of both. I mean, this can work from anywhere in the world, really. So I hope, listeners here, you'd be really fortunate to be part of one of Gary's groups. So please reach out. And Gary, thank you so much for being here today.
Thank you, Lee. Definitely enjoyed it.
I have too. What a great conversation. There's so many of these things we talked about. We could go on for an hour or two on each of them. So I've really enjoyed this. Thank you.
Likewise.
And this has been the Show Your Value podcast, where we explore the art of value creation. We want to make sure it's holistic. If you got some value out of today, please like and leave a review and subscribe. And until next time, please go forth and show your value to the world.